So we mentioned in part one of our discussion, right, that the retail investor is still occupying quite a huge majority of the investor base here in China. 80%, is that what you said, Alfred?
Yeah.
Institutional investors, of course, are very important, crucial in terms of any capital market, equity market around the world. Talk to us about why institutional investors are so important and how does China attract more institutional investors into its equity markets? Alfred, let's start with you.
Sure, let's pick up on the point I raised earlier. The function of the stock market and the price should be a signal that differentiates the good versus the bad. Now, good companies, the investor will like it and obviously buy. Bad companies, the investor will short it, and that will be reflected in the price. Institutional investor have more information and more tools to do the thing that I just said. So the participation of institutional investor, the more participation they have, the more accurate will be that pricing information. Now, the thing that the aspect that is lacking in the current market by China is obviously investor confidence and accounting disclosure and information asymmetry. But the price signals will be what the retail investor will rely on, and that needs to be contributed and participated by the institutional investor to make it reflecting the real information.
So it provides a better signal for retail investors,
yes,
therefore to invest in the market. Okay.
I also want to add 2 points. One is usually those institutional investors are long-term investors, so they pays a lot of value, pays a lot of attention to the value into the stock, and also they are not too much speculating like the retailing investors. The other point is some selective institutional investors, they are actually active investors because they want to be actively involved in the board, in the corporate governance, in terms of decision making. And this is what the Chinese stock market really likes.
Right.
So I believe this is very good for the overall market development.
Now let's talk a little bit about the QFII scheme. Now, China has expanded the QFII scheme and looks like it's going to do that in the future as well. Is it fair to say that the significance of the QFII program overweights the size of it in the current Chinese equity market?
I don't think so. If you look at the overall percentage, it's still pretty low. And I believe if you introduce more sophisticated international investor, you can actually help this market to become more mature and to more reflect the real value underneath.
Yeah, I think for the QFII market, it's important to take a global perspective, because QFII by definition is to attract foreign investors to invest in China. And foreign investors now have a choice of different markets. United States is picking up the economy. Japan is obviously devaluing the currency and picking up the economy again. Hong Kong is also growing in terms of liquidity. So from a foreign investor point of view, they do have a choice to allocate their portfolio. So what is it in China that would attract their money into it? Not only is the fundamentals, the overall economy growth, but also what's the instrument in the market that can allow me to optimize my risk and return in the portfolio. And also when I do need to exit, I do have the liquidity in the market that will provide me with that exit strategy. So to me, the QFII is an important initiative in the market, but it does require different enablers and other initiatives to really get it to function and get it to a more meaningful scale.
Yeah, also to add to that point, because we're just approving the quotas, whether they really want to put the money in is purely depending on their decision. So, I mean, you don't exaggerate it because you just give them an overall cap.
Right.
But it really depends on their willingness to invest.
But they should be, right? I think the government is sending a clear signal that they want more foreign capital into China, because Guo Chuqing, the head of the CSRC, has mentioned before earlier this year that this QFII quota could possibly expand 9 to 10 times from where we are right now. The pace of QFII quota growth since 2010, the end of 2010, has been spectacular. It was like, what, 19.7 billion US dollars, end of 2010. Now we're at 80, possibly expand it 9, 10 more times. QFII expansion, down the road, right?
Yeah. And that's more helpful for the market to grow.
Yeah.
Okay.
And actually, one more thing that the government did in order to increase the attractiveness of the market is it said it had plans to allow the pension fund to be invested in the stock market, and also maybe the public housing fund. That is a common practice in developing nations as well. But is it wise for China? Is it a good decision for China to do that at this time? Because apparently the equity market is still pretty much underdeveloped.
I think it is a critical initiative by the government to do that. The reason being that the current equity market is falling a little into a vicious cycle in a way, because there's lack of liquidity in the market. The good companies are not going for listing because of the low valuations. Investors do not have confidence in the equity markets and the information they provide. So the government and also the intermediaries need to really inject new energy into the market. By introducing the institutions that you talk about, it's going to add more liquidity to the market and then effectively bring the good companies to actively raise financing in the market because of the higher liquidity and the higher valuation. That in turn will help and contribute to the investor confidence issue that I talked about.
Speaking of opening up, let me change gears just a little bit here. We're talking about opening up China's capital markets. You know, back in 2011, we heard about this Shanghai's international board. It was all the media hype back then. At the end of 2011, we saw it dying down a little bit, put on hold indefinitely. What does this signal for the opening up of the country's capital markets, Gao Zhen?
Well, I would say, as you can see previously, all the measures is to trying to pull all the investment into Chinese market, like to attract the QFII, to do other things to improve the liquidity, to improve the, the investment on the stock of Chinese companies. But this international board is actually to open a way for a funding source for international company in China. So I think this actually is not the main trend of decision making, or it's at least not the main purpose of the authority to do that. But of course, this has the merits because it's more in favor of the investor than the one who issuing the stock.
Right. Okay.
So this kind of let the international company like conglomerates to also raise funds in Chinese market, have Chinese domestic investors to have exposure of blue chips abroad. I think it's very good for the Chinese investor, as also for the institutional investors, because they have another way to allocate their money.
I think the signal they're sending is that it may not need a different board to attract the foreign companies to be listed in China. If the policymakers and the intermediaries and the companies can fix some of the fundamental issues that we talk about, and with the gradual opening of the RMB as a capital and currency, if China is a good market to raise capital, then naturally other foreign companies and multinationals, they would come to China to raise money without even a secondary board. They will raise RMB denominated stocks in China with certain enablers in the back about currency exchange.
So you don't see the international board back on the table soon?
In fact, if you do have an international board, it will signal a different, a worse message to the domestic board, to the Asia board, because it will mean that we're going to have high different standards to foreign companies and local companies. Effectively mean that local companies will be subjected to a lower accounting and listing standard than the international companies, which is not the right signal that the governments and the policymakers should signal.
All right. Maybe not the right signal right now. Folks, we have time for just one more question. We've been talking about, I sort of want to end each segment with a question about ambition and vision. It was about urbanization in part one. Part two, I want to talk about the State Council's goal of Shanghai 2020. All right, so China wants to make Shanghai an international financial hub by the year 2020. Given the financial market reforms that we just talked about and what you're seeing in the capital markets in China right now, doable? Yes or no? Go ahead and start with you.
Well, I would say this. To build Shanghai to really reach that goal, you need to take more reforms, and we need to see what are the results of these reforms. Because it's not just to say that I want to build it and then people will come there. You need to have measures to attract the human resources. The most talented people to come, the most qualified institutions, and their interest on that. So I really think that this depends on what the government is going to launch as the next step. But in general, as such a big economy, building Shanghai to be such a, it's not an ambitious goal, I would say.
Not an ambitious.
Yes.
Okay, so it's probably in the cards. Alfred, your thoughts on this? We have about 30 seconds.
Yes, I think the biggest factor that is going to affect that would be the overall China economic growth. Now, if China is able to reach the overall 2020 goals, then no question Shanghai will be an international financial hub by the size and the level of participation. But the devils are in the details. So we do need to look into the level of investor confidence, how institutional investor is going to rate Shanghai compared to other financial institutions. But in terms of the overall size and the activities in the market, no doubt it's going to be an international hub.
So it's all about fundamentals, actually?
Well, there's going to be a lot of nitty-gritty details on this coming out from this year and as we move on as well. Many great insights. Thank you for joining us on the show tonight. Gao Zhen from Mandarin Capital Partners and Dr. Alfred Sheng from Bain & Company. Many thanks.
Thank you.